The Nikkei Stock Average is Japan's largest stock market index. It represents the weighted average of 225 Japanese companies listed on the Tokyo Stock Exchange. The name of the index comes from the English name of Japan's largest newspaper, Nihon Keizai Shimbun, which is Nikkei. Japan experienced a period of rapid economic growth in the 1980s and early 1990s, and during this period, the Nikkei Stock Average also performed strongly. However, this period came to an end, and in the early 1990s, the value of the Nikkei Stock Average began to decline. This decline marked the beginning of Japan's economic stagnation known as the lost 2 decades. The collapse of the Nikkei Stock Average was caused by several factors. In particular, the bubble burst in Japan's real estate market, which had experienced excessive speculation. Additionally, many companies in Japan tried to grow through high levels of borrowing and investment, but these strategies ultimately failed, leading to bankruptcies. Economic growth, stagnation, and unemployment also increased during this period. The collapse of the Nikkei Stock Average had significant effects on Japan and the global economy. The decline of the Nikkei Stock Average resulted in Japan losing its economic power and altering the global economic balance. Moreover, the collapse of the Nikkei Stock Average triggered similar economic crises in other countries. After the collapse of the Nikkei Stock Average, Japan embarked on various restructuring efforts. For example, companies were restructured and economic reforms were implemented. However, Japan's economic growth still remains sluggish, and the Nikkei Stock Average has not yet returned to its peak in the 1990s. What restructuring efforts did Japan undertake after the collapse of the Nikkei Stock Average? How did the collapse of the Nikkei Stock Average highlight the importance of financial regulations? What lessons should investors learn from the collapse of the Nikkei Stock Average? For all this and more, before starting the video, if you're interested in universal economic history, you can subscribe to my channel and turn on notifications to be informed about new videos I upload every day. Enjoy the watch.
Universal economic history.
Japan's economy experienced rapid growth in the 1980s and early 1990s. During this period, Japan's exports increased, and the yen strengthened against the US dollar. As a result, Japanese companies saw their profits rise, and the value of the Nikkei Stock Average increased. In 1985, Japan's economy gained a larger share in the global economy and became the largest exporter among the G7 countries. During this period, Japanese companies became leaders in the automotive, electronics, telecommunications, and other sectors. Japanese companies were known for the quality of their products and innovative technologies. The Nikkei Stock Average also performed strongly during this period. The index value was around 12,000 in 1985 and reached 38,915 in 1989. It was one of the highest stock market indices in the world. However, this period came to an end, and Japan entered an economic stagnation period known as the lost 2 decades in the early 1990s. The value of the Nikkei Stock Average started to decline during this period and fell to around 7,000 levels by the end of the 1990s. The decline in the value of the Nikkei Stock Average was an indication of Japan's economic stagnation. However, Japan entered into various restructuring efforts and implemented economic reforms during this period. Today, Japan still holds an important position in the global economy, and the Nikkei Stock Average is gradually recovering. Factors and reasons. What are the factors that led to the collapse of the Nikkei Stock Average? There were several factors that led to the collapse of the Nikkei Stock Average. Here are some of them. Excessive speculation. Japan's emerging economy encouraged investors to invest in the Nikkei Stock Average. However, many investors engaged in excessive speculation and entered into high-risk transactions, hoping to make huge profits. This led to artificially inflated prices and eventually the bursting of the bubble. Bubble economy. In Japan, many markets were excessively inflated in the late 1980s and early 1990s. This situation was called a bubble economy, and it caused the collapse of the Nikkei Stock Average. A bubble economy is an economic system based on the misconception that high prices will continue. Excessive borrowing. Many companies in Japan had high levels of borrowing. This had a negative impact on the profitability of these companies, and eventually, many of them went bankrupt. Effects. What are the effects of the collapse of the Nikkei Stock Average on Japan and the world economy? The collapse of the Nikkei Stock Average had significant effects on Japan and the world economy. Here are some of the effects. Economic stagnation in Japan. The collapse of the Nikkei Stock Average negatively affected the Japanese economy and led to a long period of economic stagnation. This resulted in increased unemployment and decreased consumer spending. Problems in the financial sector. Banks in Japan struggled with accumulating bad loans. This led to major problems in the financial sector and caused many banks to go bankrupt. Business bankruptcies. Many companies in Japan went bankrupt due to high levels of borrowing. This resulted in business closures and the loss of thousands of jobs. In conclusion, the collapse of the Nikkei Stock Average had significant effects on Japan and the global economy. Problems such as unemployment, bankruptcies, and fluctuations in financial markets emerged as a result of the collapse of the Nikkei Stock Average. Restructuring efforts. What did Japan do and what were its successes after the collapse of the Nikkei Stock Average? The collapse of the Nikkei Stock Average was a turning point for Japan. Japan took several steps to recover from economic stagnation and initiate a process of restructuring. Here are these efforts and their successes. Monetary policy. The Bank of Japan attempted to stimulate the economy by lowering interest rates. This policy led to a decrease in borrowing costs and an increase in consumer spending. Fiscal stimulus. The Japanese government implemented a series of fiscal stimulus packages to encourage economic growth. These packages included infrastructure investments in particular. Business reforms. Japan made business reforms to make companies more efficient and productive. These reforms increased the profitability of businesses and reduced unemployment. External trade. Japan made efforts to increase its exports. This was particularly successful in high-tech products, which increased Japan's competitiveness worldwide. Yen value. Japan attempted to boost exports by devaluing the yen. This policy increased Japan's trade surplus and supported economic growth. As a result of these efforts, Japan began to experience economic recovery from the early 2000s. Unemployment rates decreased, business profits increased, and Japan's exports grew. Japan continued to be one of the world's largest economies in the early 2010s. However, Japan's restructuring process is still ongoing. Challenges such as an aging population and public debt remain. Nevertheless, Japan achieved economic recovery through the steps taken after the collapse of the Nikkei Stock Average, and this success serves as a remarkable example globally. Lessons learned. What are the lessons that can be learned from the prolonged collapse of the Nikkei Stock Average? Several lessons can be learned from the prolonged collapse of the Nikkei Stock Average. Avoid excessive speculation. The collapse of the Nikkei Stock Average serves as an example of the risks associated with excessive speculation and artificially inflated prices. Investors in the stock market should avoid excessive risk-taking and pursue a more balanced investment strategy. Importance of financial regulations. The collapse of the Nikkei Stock Average highlighted the significance of effective financial regulations. Regulatory authorities should strengthen financial regulations and oversight to prevent similar collapses in the future. Economic diversification. Japan's economy suffered a significant blow due to its heavy reliance on exports, especially during the collapse of the Nikkei Stock Average. Therefore, countries should strive to increase economic diversification and reduce dependency on a single sector based on external trade. Lessons for investors. What can investors learn from the collapse of the Nikkei Stock Average? Investors can learn the following lessons from the collapse of the Nikkei Stock Average. Build a diversified portfolio. The collapse of the Nikkei Stock Average heavily impacted investors who were solely focused on a single index or sector. Therefore, Investors should diversify their portfolios, invest in different indices and sectors, and diversify their investments to minimize risks. Adopt a long-term investment strategy. The collapse of the Nikkei Stock Average highlighted the risks of short-term investment strategies. Investors should adhere to a long-term plan, aiming for sustainable and stable growth in their investments. Importance of fundamental analysis. The collapse of the Nikkei Stock Average demonstrated the risks of insufficient fundamental analysis of stocks and companies. Investors should conduct thorough fundamental analysis, considering factors such as financial health, management quality, and growth potential when making investment decisions. Thank you for watching my video. If you liked it, please hit the like button. If there's a specific video you'd like me to make on economic history, don't forget to mention it in the comments section. I wish everyone a pleasant day.
Universal Economic History.